Hey everybody, this is Shauna the Tax Goddess. Wanted to come to you live as soon as we had data. So the Senate and the House have agreed on our new set of laws. We have tax reform. So there are massive changes happening in the tax law. It's happening across the board, businesses, individuals, it's happening all over the place. Some of the really big things that will impact our small business owners that are coming out of this, we do have corporate tax rate reductions. So for tax years beginning after December 31st, so basically starting in 2018, the new corporate tax rate is a flat 21%. Dividends, there's some great dividend deductions. The corporate AMT was repealed. I know we talked about that a couple of days ago. There is an increased expensing for 179 items. So basically that is if you are purchasing equipment. It's different for passenger vehicles. Okay, so be really careful about this. It's different for passenger vehicles. But if you're purchasing vehicles that are over the 6,000 pound weight rating limit and not more than 14,000 pounds, those can be expensed in any year up to a maximum of 25,000 for that year if it's been purchased, and that includes 2017. The new depreciation rules include up to $1 million worth of equipment that can be 179. Now, you may not choose to do the full 179 expense because they have also expanded the 168K, which was a specialty rule. It was set to expire at 50%, but instead it will be going up to 100%, I believe, for a couple of years and then back down again. So you may choose to take the 168K versus the 179. Both different types of codes and they do different things. So definitely check with your CPA and your tax strategist which one is going to be better for you. Now for passenger vehicles, right? So not the big heavy trucks. For passenger vehicles, they are increasing the first year deduction from $3,160 to $8,000. So that's going to be really nice for anyone that bought new vehicles this year. So yay for tax changes. Now, other big things that really jump out at me, if you are in an industry where you use the DPAD, the Domestic Production Activities Deduction, that is being repealed. I repeat, that is being repealed. 100% repealed. It is gone. So that is going to begin in 2018. They did finally decide that will begin in 2018. So 2017 is the last year that you can file for DPAD. Make sure that you're checking, again, your CPA, your strategic tax partner. DPAD really applies to anyone who produces things in the U.S. Okay. Now that can be manufactured, produced, grown, extracted. It could be film productions. It can be engineering and architectural services. It can be the making of jewelry, right? If you are producing anything, this DPAD deduction is huge for you. So be careful with your 2018 estimates that you are in fact actually making sure that you're paying enough in, because they're removing that completely. So definitely watch that if you're doing any kind of productions. There is also the removal of the net operating loss carrybacks. So it used to be that you could carry a loss back a couple of years. At the end of 2017, that's going to be it. And they're actually going to put a limitation on the amount of net operating loss that you're even allowed to take. So if you have net operating losses, or if you're expecting a loss this year, definitely make sure that you're checking with your CPA on that. So as you can tell, it's just piece after piece after piece. Fringe benefits, one of the things that really jumped out at me, entertainment, how it's always been meals and entertainment. Entertainment is no longer deductible. So that's it, no longer deductible. And there are going to be some changes to fringe benefits for employers. So again, check with your CPA. Let's see, what else do we have here? Some really big things. There's a lot of the credits that have been reduced. So employer paid family medical leave, rehabilitation credits, orphan drug credit. There's a lot of these things that are basically gone or changed in some way. One of the biggest things for anyone with inventory, if you guys have inventory that you're carrying, They have changed the inventory rules. So the really nice part about it, it used to be when you hit $1 million of average gross receipts, you now have had to account for inventory. They have changed this to $25 million. And this is one of those areas where I'm really happy about it, because as small business owners, you know, you can hit $1 million pretty quickly as a business owner. This is gross sales of $1 million. 25 million, of course, means that you're a much bigger company and you're producing a lot more. You're not required to track inventory. And that is a huge change. It takes a huge burden off of the small business. So I'm really, really happy about that. Expensing. This is something really, really cool. In the past, depreciation, right? So we have the 179, which is expensing for equipment. But you used to have to, if you bought some smaller things, you used to have to actually include those items in inventory. We come back to that inventory. They are changing that as well to the 25 million. So this is really, really helping the small manufacturers, the small business owners, the small, small companies that carry inventory. I'm thrilled about this tax law change. So there's changes there. Now, I want to switch over really quickly to the personal side. Some of the major changes that are happening on the individual side, because I believe that this is really going to be impacting some people. So one of the biggest things that really jumped out at me from this standpoint is they're talking about, or they have talked about, the removal of the standard exemption. Now, this is not the standard deduction, okay? This is specifically the exemption amounts for individuals, okay, for individuals. So one of the, we are absolutely getting the ACA repeal. And, we've got that. So if anybody has the health insurance that does not meet the ACA, that is now there's no more penalty, which is fantastic, right? Which I know is one of the biggest things people have been really concerned about with the health insurance bit. So we've got that. That's gone. The Obamacare is now dead from that standpoint. What we're looking, one of the things, and I'm trying to pull up, I'm so sorry, I'm trying to pull up the individual side for the exemptions, because I want to get you guys these exact numbers. Basically, who this is going to impact the most. Okay, what's really happening here? If you're married, husband and wife, or however that is, you have two people, you're married, they are increasing your standard deduction, okay, which is fabulous. Super happy about increasing the standard deduction. However, what is happening is that they are reducing the actual exemptions. So if you have multiple children, they're increasing the child tax credit, but they're reducing the actual personal exemptions. Now they're talking about reducing this through 2025. So there could be some real impacts if you've got a bigger family. Again, definitely make sure that you're checking with your individual tax preparer, your tax CPA. Are you covered? Are there changes? What do you need to do? So as you can tell, tons and tons and tons of changes. I wanted to get you guys this as soon as we knew, as soon as we heard the information and what's going on. We are about to go over, and we just went over the information on the new tax reform. It just passed today, December 20th. If you don't have a tax strategist on your team, you need one. So feel free to reach out to us if you want. A short, easy website is bigtaxdrop.com. It's going to be the links and stuff below. So feel free to reach out to us, grab an appointment. We're booking into early January, but this is the kind of information. This is the biggest tax reform since 1986. So if your CPA isn't blowing their mind like I am today, definitely, you're looking for a tax strategist to help you reduce your tax burden. So we'll see you there, bigtaxdrop.com. Thanks, guys. Bye.